fired up here so we can do some great stuff. Guys, I want to do more live market reads, so I'm going to try to get through. Hey, Bajoy, good to see you. Derek D, nice to have you. We are going to talk about two different platforms. We're going to talk about TradingView for you guys that are in our funding company, you guys that are using TradingView, making the transition. And when we talk about TradingView, good morning, Izzy Got Game. We're going to talk about being on the right side of momentum and nothing in the way. Crazy concept. We're also going to talk about NinjaTrader. We have a lot of people trading NinjaTrader as well, and we're going to talk about a couple trades on NinjaTrader. And believe it or not, brace yourselves. We're going to talk about having momentum on our side and nothing in the way. And guys, one of the great things about what we do in this room is we can always have momentum on our side and nothing in our way. And that's a choice that you're going to have to make. But I'm going to teach you how to recognize it. This is an educational room. I will take trades in this room on a simulated environment if rules are met, but if my rules aren't met, I won't touch it because that is the muscle memory that I have built up in myself to not trade when I don't have an advantage. Today's Tuesday, August 19th, guys, and we're just looking to see if there's anything high impact in news. There's not. That's my first stop. Victor, we are going to educate you. So what we're going to do today, guys, is we're going to get straight to it. I'm going to give you two plans. The first plan is what we call the KISS plan. Talk about trend trades. Ron, just for you. The KISS plan is a plan designed for my NinjaTrader users, guys, and the KISS plan is designed to optimize your chances of success, which means that this is the best of the best way to take a trend trade. This is the highest probability trend trade, and when you follow the checklist for the first trade, what happens is you put yourself in a position to win, to have that potential to win 70 to 80% of the time. This KISS plan talks about the rules for entry. They're very, very clear, and they become very easy to follow with a little bit of study. And it also gives you a plan on how to manage it. The management is designed to get you focused on stop placement. The management is designed to get you paid. The second trade is not a high probability trade. This is a trade that is going to rely on your ability to recognize when trouble is in the way, but that trouble has the potential to break. Again, it's a very deliberate checklist for entry and a way to manage it. So I'm going to drop that in the room. I just dropped that in the room. If you are one of my TradingView users, your TradingView plan, believe it or not, tells you exactly what you're looking for. Hey, Chariot. It tells you exactly where to find it, what an entry looks like, and it gives you a very clear checklist to enter the trade. So everything that we do in this room, every day, revolves around three things. Let me pull this one over here. What did I do? No matter what platform you're on, everything starts with momentum. Everything starts with understanding what direction the market is moving and knowing whether or not it is pushing with enough force to consider it an advantage. And then you'll use areas, you'll use zones, you'll use fibs, you'll use one-to-ones, divergences, and you'll make sure that you're not trading into a brick wall that could stop forward progress. And then once you have these two, you'll define your entry. The first entry that we talk about is the high probability trend trade entry. That is nothing more than a trend trade. And when you have momentum, when your path is clear, when you can define that entry, good morning, Andy, you're going to say, I'm in a high probability scenario. I have the best of the best. Life is good. Let me take this trade. So as the brand new user, focusing on these three things, give it 15, 20, 30 days, really get good at it. What happens is you begin to speak in terms of advantages. You'll look at your chart and you'll say, one of those three advantages that I worked so hard to recognize is gone. I'm now in a medium probability scenario. Or you'll look at your chart and you'll say, holy smokes, 2 out of 3 of the things that I'm looking for to make life amazing are no longer present. It's a low probability scenario. And fingers crossed you say something clever like, I choose not to enter the market. And remember, guys, you are in control of the entry. You and you alone make the decision whether or not you're going to enter the market. When you know what's working for you and when you know what's working against you, guys, you can make intelligent decisions. You can choose to enter, you can choose to not enter, but knowing what you're up against, it's going to let you manage a little more assertively. It's going to let you manage a little more aggressively when you need to manage a bit more aggressively, like in a medium probability or especially a low probability scenario. So we're going to break it down for both platforms, guys. And Victor, absolutely, we will go through and we'll do that for you. No worries at all. No worries at all. So I'm going to start with indicators. Whichever platform you're on, it will have trigger lines, guys. It'll have small triggers and large triggers. Small triggers are just a fast-moving average. It's like the immediate momentum. Large triggers are a slower moving average. And it's a little slower moving and a little harder to see change with these. So you're going to use trigger lines to define momentum in the market. You're going to use trigger lines on NinjaTrader to define problematic areas. You're going to use large triggers on NinjaTrader to define entries. So trigger lines are gonna show up in everything you do on that NinjaTrader platform. You're also going to have areas on both platforms. You're going to have divergence highs and lows, which means that there was a loss of momentum right at a pivot. You'll see a magenta line from a high. You'll see a cyan line from a low. And guys, every time you see this line with a negative number, I want you to say to yourself, I'm losing momentum. I'm losing the advantage of momentum. Divergence equals momentum. You're going to see red Fibonacci resistance when the market is trending up. This is one of those areas that could stop the market. You're going to see red Fibonacci support. This is also an area that could stop the market. The same is true of yellow 1-to-1s and even a mid-band in some cases. So both charts are going to have areas. The one thing that's going to be different for a lot of you is many of you have added the chart prime zones onto your TradingView charts. Good morning, Mike. TradingView charts will still have yellow 1-to-1s. They can behave as support or resistance. They'll still have divergence highs. They'll still have divergence lows. They're still going to use trigger lines. You'll even see a mid-band. The only difference between the two platforms is a lot of you are using the chart prime zones because Fibonacci is not available on TradingView yet. So anytime you see a fib on NinjaTrader, know that it could stop the market. Anytime you see a zone, just pretend it's a fib, guys. This is an area that could stop the market, and you can see that it did beautifully. So what we're going to do is we're going to talk first about NinjaTrader. 3 rules on 2 charts, guys, and I'm going to go through this a little quicker today. So if you have a question, raise your hand. I'll repeat the lesson. It's only 3 rules. Large chart needs strong triggers. That provides the advantage of momentum. Large chart has no terminations. That gives you a clear path. Small chart is going to use a limit order to buy or sell a pullback at an area inside of triggers. That's defining the entry, how to get into the market. These 3 rules happen 2 charts, guys. Your large chart is a very slow moving chart. It defines direction, momentum, areas. It takes the first bar on a large chart to let you know that rules 1 and 2 are met. When they are met, and hopefully only when they're met initially, you'll go to a small chart, a faster chart, a refinement chart, and it's going to take the inner workings of this 1 bar. And in a perfect world where your trend trade works, it's going to show a retracement, it's going to show a bounce, and it's going to show continuation with everything the large chart told you was most likely to happen. This smaller chart is your entry chart. The smaller chart's going to allow you to manage. So it is only 3 rules, it's only 2 charts, and no matter which platform you're on, it's 2 charts, and the 2 charts are a representation of the people that are in charge, and those people are not you, believe it or not. Large chart, think of them as the large crowd. These are the men and women that react to the news releases when they're high impact. These are the men and women that create trends. These are the men and women that establish momentum. These are the men and women that react at those key areas, entering, exiting, and making decisions. And when you go with a large crowd, you typically are on the winning side. The small chart is more of a snapshot of a moment in time, guys. When everything says up, the small crowd, the small chart typically fights down just a little bit. Or when everything says down, that small crowd fights to the upside, guys. And the small crowd typically loses 70 to 80% of the time. So we're using that small chart to pinpoint precisely where the small crowd is most likely to fail. This becomes your entries for the highest probability trend trade. So keep it simple, guys. 3 rules, 2 charts. Let's remember who we're trading with or against. And we're just going to go back and break them down into the rules. Every day I present this, guys. There's a path to getting to where you want to be. Learn your rules. Learn the basic rules. Get good at the simple rules. Don't complicate it. Practice, practice, practice. And then post in the room and tell me what you saw, guys. Every time you post in the room, tell me what you thought about momentum and describe whether or not there was a clear path. And do me a favor. Show me where you entered. Tell me where you exited. Because every time you do this, we're going to make sure that you're reading your indicators accurately. We're going to make sure that you are understanding the advantage of momentum and how to read it, that you're understanding whether or not an area is problematic, and most importantly, that you're understanding how to get the least amount of risk as you look for your trades. So this becomes a private session every time you post in my room. Your annotations, you telling me what you see when everything is right, becomes a recipe for success, guys. It makes it repeatable. It makes it so that you can study it, so that you can prove it wins more than it loses. So don't hold back on the annotations. The second thing is just keep it simple, guys. I've dropped in the room the plan for all of my NinjaTrader users. Good morning, Miss Estefania. That gives you the 2 trades and checklist for entry. I've also dropped in the room the same for TradingView. Guys, TradingView is going to be very similar to NinjaTrader, but it's going to be just a little bit different. So when we talk about these rules, know which platform you're on, so we don't do a little crossfading on the 2. So strong triggers, guys. Strong triggers are the easiest lesson ever. On NinjaTrader, the only way you can have strong triggers is if you're trading with the trend. And on NinjaTrader, the large chart background, whether it is green or red, lets you know whether the market is going up with the green background or down with the red background. This is a NinjaTrader thing because your large chart on TradingView is just too slow. Strong triggers is one look, guys. It is one look. It is deliberate. There's not any wiggle room for the new user. Strong triggers in an uptrend means that your large triggers and your small triggers are just as green as the background. And in order to have strong triggers, there has got to be separation between the small and large. Looks like scissors that are open, because when scissors are open, you can cut. In a downtrend, everything needs to be red. Those scissors need to be open. And when the scissors are open, guys, you can cut. You can cut a check, right? So that separation is strength. Let the colors match. Let there be distance between the small and large. And as long as there is, you have strength, and the odds are favorable for the market to continue in the direction of the trend. Once the small triggers return inside of the large triggers, this is where weakness is the word that you're going to use. And when you have weak triggers, anything could happen up or down. You'll see retracements from the middle of nowhere. You'll see key Fibonacci areas more likely to hold. So brand new users, let it either be momentum or let it be weakness, and only one of them is the rules true. But once the rules are true, oh, guys, give me a Y if you can hear me. Cool, thank you. So momentum starts on the large chart, guys, and it uses the most current bar. So give me a Y in the room if you would, Small triggers are below the large triggers. Space between the two and the colors match. Guys, this is your look for momentum. It really is that simple. It has nothing to do with Fibonacci. It has nothing to do with divergence. It doesn't even have anything to do with the bars. Once the separation is there, guys, that's a market with the potential to continue in the direction of the trend. You'll see it on the most current bar, or you won't see it because the colors don't match. The larger green, the smaller down. I don't have momentum yet. I don't have that first advantage, and because I don't, I choose not to go to the second rule. So guys, you're going to see this all day long. There's momentum as well, and now it's beginning to die. So momentum leads the way, but once you have momentum, you have to make sure you have a clear path. One of the great things about what we do is we know exactly where decisions are likely to be made. We know exactly where highs have the potential to be. We know exactly where lows have the potential to be. So rather than trading directly into them, we have the ability to trade away from them, to take trades to get to them. Termination conditions are just horizontal lines on a large chart. Horizontal lines, divergence highs, resistance, divergence lows, yellow one-to-ones. Guys, these are areas where these men and women are making decisions. So to define a termination condition, the first step is just let the big crowd get there. So when price reaches an area, this is the first step. When price reaches an area, your triggers are going to tell you everything you know. The same way they describe the momentum, they're going to describe the path. When price, your dynamic Renko price bars get to these yellow one-to-ones, all you have to do is ask yourself, how many triggers got through the area? And if the answer is 0, this is an area that I want you to assume is gonna stop the market. I want you to assume that it's going to create an untradeable bounce. I want you to assume that it may even reverse the market completely. When you reach a Fibonacci area with 0 triggers through, this is the image that I want in your head. It just can't get through it. And guys, it could break, but once you're there and no triggers, just assume that it won't. The same way it didn't break 10 minutes earlier. If it is going to break, the trigger lines will tell the story. So we're just counting triggers. If 2 of your trigger lines, both small, get above those yellow one-to-ones, this area has the potential to break, but it's just potential. It's not a clear path yet. Rule number 2 isn't met yet. A lot of you are going to find opportunities with 2 triggers through. Be very, very aggressive in your management because this is not the most likely scenario of the break. Once 3 triggers get through, 1, 2, 3 of the trigger lines get north, guys, now this area has the potential to break. Now it's more likely to break. The breakout's more imminent. You're still going to manage assertively because the path is still not clear. The path is not clear until all 4 trigger lines get above the area that was behaving as resistance, and that area now behaves as support. Or all of your trigger lines get below support, and support will behave as resistance. And your path will remain clear until you reach the next line. So first it's momentum, defined by the trigger lines, separation between the small and large. Then it's a clear path. All you're going to do is count triggers. So just one more time for grins. Whoops. Let's go to a large chart. This is crude oil, ladies and gentlemen. First, it's strong triggers. Does everybody see it? New users, give me a Y if you see it. Separation between the small and large. But that's only one of 3 rules. Price reached Fibonacci support. None of my triggers have broken through. That's a termination condition. Only 2 triggers are through the area above me. That only has the potential to break. So guys, I have, in the most current view, an area that says no more short trades. And I also have an area that says only 2 triggers are through, probably not your best look for a breakout, especially if it's trading directly into another area of support. The futures markets trade billions every day. You will see this scenario. But I want you to see how effective in this one picture rule number 2 is going to be for you. Price reached Fibonacci support. None of the triggers broke. Absolutely no reason to take that trade unless you're just feeling a little daring, right? The same was true for this fib. That divergence low, that fib, and look at this, support broke, and when it pulled back, support became resistance, and that's exactly what stopped the market. Guys, you know. Uh-oh, let me reboot, Caleb. You know exactly where highs and lows have the potential to be. Your trigger lines are going to tell you whether or not they're more likely to stop the market, whether they have the potential to break, or whether they are broken. And guys, it just continues. Support, no triggers. Up it goes to resistance, no triggers. Down to support, no triggers. Back to resistance, no triggers. Weakness is where the market started down. So you have the advantage of understanding when there's something in the way. You have the advantage of knowing precisely where the market is most likely to turn. Caleb, did it come back for you? I just want to make sure. So guys, when you get to areas, count triggers. And then once you have momentum, and once the path is clear, let's go define an entry. Your entry rules say that you're going to buy or sell a pullback at an area inside of triggers. Guys, all you're going to do is you're going to pinpoint where the small crowd's push is most likely to fail, right at an area, right inside of large triggers, whether it is large or synthetic. There are two trigger lines on your small chart, on your entry chart. You have the large triggers from the small chart. Those are going to be smooth. Compare those to the small triggers to define momentum, and you're going to have the large chart large triggers. We call these synthetic because they're imported from a different time frame. It's fancy. Guys, these trigger lines define the retracement zone. These trigger lines define where that push down is most likely to go. When you put a fib, a midband, or a yellow 1-to-1 inside of the retracement zone, you have pinpointed exactly where the small crowd is most likely to fail. You have pinpointed precisely where the market is most likely to bounce and continue with the trend. So for a long trade, your reversal bar begins the pullback, the fight from the small crowd. The trigger lines, large or synthetic, define the retracement zone somewhere from the top to the bottom. The areas inside define where it's most likely to bounce. We're good. We're not always to the tick good. So you're going to activate a limit order, a tick or two above the highest point of support. This becomes your entry for the highest probability trend trade. But because you have defined where the market is most likely to retrace, because you can identify where the market is most likely to bounce, you're going to learn to ignore any lines beyond the trigger lines. Because once you get below the retracement and the bounce points, guys, your advantage is no longer in play. Rule number 3 is no longer giving you an edge. This is where the market should not go. And once you get below, you don't know if, when, or where that market may continue up. For a short trade, the fight begins with the reversal bar. The trigger lines define where the retracement is most likely to occur. The area within those trigger lines, above the lowest line, below the highest line, that's where the market is most likely to bounce. You're going to be able to activate a limit order and wait for the market to come to you right at that bounce point. This is your entry for the highest probability trend trade. Anything on the wrong side of the triggers is where the market should not go. This is where your advantage is no longer in place, and you will learn to ignore those lines. So by using rule number 3 to define entry, pull back to an area inside of triggers. Learn that phrase. You have defined where the market should not go. This is going to be your initial stop placement, ladies and gentlemen. Where the market should not go. And every 20 to 30% of the time, guys, every 2 or 3 out of 10, that small crowd is going to push through everything. And instead of you hoping that they magically retrace somewhere down here, you're going to accept that loss as a cost of doing business. And what you're going to realize is that anything that wins 70 to 80% of the time has to lose 20 to 30% of the time. It's normal because of the methodology, because of your understanding, because of insisting that the market give you strong triggers, demanding that the market at least give you the potential to break, and having the patience to wait for it to come back to an area inside of triggers, you have an edge. And guys, trading is probabilities, and the probability is that this market is more likely to continue up than down. You can study this look, because on your large chart, inside of that one bar, you define momentum. You define your path. And inside of that one bar from the very top, that's where your reversal starts, your retracement. The very bottom of that bar, it looks like a tail or a wick. That's your bounce at the area inside of favorable large triggers. So we can go back on a large chart. Watch this. This is all cool study. Get past the overnight stuff. Guys, when I have momentum, when I have the potential to break, I can circle that tail. Can everybody give me a why that they see that the smalls have blasted through the areas, that the large are still breaking, but there's that tail? Watch this. Instead of just circling the tail, I'm going to put a box around that one bar. And I'm going to go back on my smaller, faster chart, on my refinement chart, on my entry chart, if you will. And I'm going to find that box. And inside of that box, the very beginning, was a reversal bar. And it pulled right back to areas inside of triggers. And it never went to where the market shouldn't go. And it continued down with all the momentum. Guys, this is your pattern. The top of that tail is the highest point of that retracement. Notice that it's still inside of the triggers. Notice that momentum never changes. Guys, this is your pattern, and you can study this pattern without ever having to take a trade. And you'll see that even when the rules aren't met, it's into a termination condition, it still pulls back to areas inside of that trigger retracement zone, maybe setting you up for a lower probability scenario. There's a circle from yesterday, 2 triggers through. Everything is up, separation between the small and large. And there's your pattern one more time, guys. Pull back to the areas inside of triggers, never gets below the triggers. So this is, Ninja Traders, this is your first trade, and this first trade opens your eyes to the rest of the trades. Look at the termination condition. Look at the reaction. They are going due north, straight from an area that could stop the market. 90% of your day is spent reading indicators. 90% of your day is sitting on your hands doing nothing. Are there any questions about the high probability trend trade? We're going to come back and keep looking at the live market, doing the read. I still don't have momentum on the S&P, guys. Absolutely nothing to do. Don't have a clear path. Don't have odds favorable momentum. Don't feel like risking my money. So I'm just going to sit back and I'm going to wait. And we're going to go to TradingView. So TradingView still uses 2 charts. Your TradingView is going to use a large chart. It's a 15-minute chart. It's a very slow chart. It's going to use a 1-minute chart for entry. 1 minute is still a pretty long time compared to Renko. So we're going to read these charts a little different. And I'm going to show you exactly how to do it. When you come to your TradingView chart, the 15-minute is going to be your roadmap. It's going to be key targets, turning points, termination conditions. The small trigger lines on this big slow chart, make this bigger. The small trigger lines on this large chart are going to tell you what you need to do, and it's a 3-part process, and I know that feels like a lot, but it's really not, guys. What direction are the small triggers going? The small triggers are going down. As the brand new user, I'm only looking for short trades. I'm choosing to only trade in the direction of the small triggers. Next, I'm going to ask myself, where is the most current price? Thank you, Pablo, for that heads up. Where is the most current price in relationship? Absolutely, Mike. Where is price in relationship to those small triggers? And there's 3 options. The first option is to the left of the triggers. This is the strong side. You're welcome, Mike. So when price is on the strong side of those small triggers, you're going to be aware of 1 minute trouble, but that's when those 1 minute areas have the highest probability of breaking. The second option is the transition, where the most current price is trading inside of the small triggers, somewhere above the low line, below the high line. When price is inside of the transition, or inside of the triggers, you're still going to be aware of those 1 minute zones. They still have the potential to break. You're going to manage a little more assertively if they don't. But once you get to the right side of those triggers, the weak side of the triggers, guys, this is where those areas on the 1 minute are most likely to bounce. This is where you want to have the room, nothing in the way on the 1 minute. So by understanding where you are in relationship to the triggers, you're already setting up your management plan. And then finally, you're just going to ask yourself, is there anything in the way? Are there any of those brick walls that could stop the market? Are there divergence highs? Are there one-to-ones? Is there a divergence low? Is there a zone? And guys, you want to have room to targets. Having room to targets is a big part of what we do. So when you say, okay, the triggers are down, I'm on the weak side of the triggers, there's nothing in my way, you're going to go to the small chart, the faster chart, the 1 minute chart. And this is going to define the immediate strength of the market. This is going to define your entry points. So entries on your small chart will be taken from mid bands for trend trades. They will be taken from HVA lines if the market is coming from a termination. So if the market hits a zone, you're gonna buy or sell an HVA line, and it's going to be very close to the zone that was reached. And then finally, HVA lines and areas can be used for momentum trades. And there's two types of entries that you're going to see on the small chart. There's the trend trade style entry. This is the one when we're taking a pullback, when the market is retracing, and we know that it's more likely to pull lower when the small triggers turn against you. When the immediate momentum turns against you, you're going to wait for a pullback to a zone, to a one-to-one, to a mid-band. And then you're going to enter with the close on the correct side of the triggers when the rules are met, guys. And not fighting these small triggers is going to keep you out of a lot of pain and a lot of hoping. Letting it pull back to something solid, something to bounce from, is going to give it a better chance of success. So you're going to see this on trend trades. You're also going to see what we call a momentum trade. And a momentum trade means that the large chart was trading in a direction. There was absolutely nothing in the way. And your small chart is giving you that strong trigger look. Small's below the large or small's above the large. And guys, with this level of momentum, this is where you'll wait with a limit order. Right at an area, right at an HVA, and you're going to say, okay, with all of this momentum, what used to be support is now behaving as resistance. I'm going to enter right at that area, as opposed to the small triggers turning against you and being just a little bit more patient, waiting for the market to close on the correct side. So there's two types of entries, and there are three trades in the plan, guys. There is the trend trade. When the 15-minute is not trading into areas, when the 1 minute is not trading directly into areas, you're going to buy or sell that pullback on the correct side of the triggers, right at the mid-band. HVA trade, when an area is reached on the 15-minute chart, the 1 minute triggers roll, tell you that things are changing. You're going to buy or sell a pullback to the HVA line. And guys, your HVA trades very often happen very close to the area that's happening as a termination condition, where your trend trades, your momentum trades, whoops, wrong one, those are going to happen a little deeper in the move. Your momentum trades are going to be caught when everything says up. Whoop, that's a momentum trade. The market pulls back to the zone and go, as opposed to, sorry, I hit the trend trade. And the trend trade is going to be a deeper retracement. It's going to be a bigger pull down and then getting in on the correct side of the trigger. So two types of entries, guys. You have checklists for both. I encourage you to understand where the rules are met. Large chart gives the overall view. Large chart gives you the direction. Large chart defines the key areas. Small chart is just an entry chart. So we're going to go through now, and we're just going to start. I front loaded all the pictures from pre-classroom. So we're going to go through, and if it is NinjaTrader, we're going to talk about momentum through strong triggers, whether or not the path was clear, and talk about the entry areas. If it is a trading view chart, we're going to go through what direction, what side, is there anything in the way, and then we'll go through and we'll define those entries. Those zones, Victor, are from Chart Prime. And Chart Prime is an outside vendor. And those are supply and demand zones. Oh, thank you, John Novak. And John just dropped it in the room. So I want to remind you guys, I'm not the trade police. My job is to help you learn to read your indicators. My job is to point out things that are good, to point out things that may be problematic. My job is to help you understand when you're being risky. Maybe even when you're lucky, because guys, luck runs out the second you go live, it seems. I also want to remind you guys, and this is important, when I started with this software, John Novak taught the room. Guys, John Novak is the most brilliant chart reader you will ever meet in your life. John Novak sees the moves within the moves, and even the moves within those moves. And there were men and women in this classroom that were so much further than me. They were posting pictures of trades that I didn't understand. And I spent my first month feeling left out, feeling like I'm missing out, feeling like the market is moving and I'm just not ever going to make any money. And it really was. It was a very big problem that I had to work through, guys. If you are the brand new user, I want you to give yourself a little bit of grace, and I want you to be okay with being a little inactive. The futures markets trade billions every day. You're going to see the potential, unquestionably, to find $400 to $500 a day pretty easy with a very simple plan. Guys, focus on the best for you initially. Focus on the KISS plan for you initially. Focus on the trading view plan for you. Let it be simple. Let it be focused. Be willing to be patient, and you will find more trades. You will see more opportunities. You will recognize more patterns. But we got to build that foundation first. So, with that said, when you see trades that don't fit the rules, understand that that's where you're headed, even if that's not where you are. When you try to match what someone else with more experience is doing, you miss out on key elements. All right, so Paul got us going. This morning I kept getting stopped out. Paul says crude oil needs 12 to 15 tick stops. So we got in at the bottom, used a big stop, and made a lot of money. That's awesome. And that's taking a basic plan and learning how to make it adapt to you. And Paul, great job without an entry chart. I don't know if your stop made sense, but I'm glad it worked out for you. So 15 minutes. Let's go through the read. Price has already reached trouble. Does everybody see that Paul's on the weak side of down triggers? Coming from an area. Tons of room to the upside. No momentum to take, no momentum trades here. With NinjaTrader Estefania, that crash is, if it does it 3 or 4 times, you're going to want to build a new workspace. There's something corrupt in there going on. You're going to want to build a new workspace or clean it out and go back through. This is crude oil. That's probably October. I can't tell just by looking, Brian. But we are in October. So Paul says because of the termination, because of the transition, and because the small triggers turned against you, Paul, you're being patient and you're waiting. And you're waiting and waiting and waiting. And then you get to the area. Guys, this is the classic trend trade look. By the time he gets to the area, the small triggers are rolling up, which puts him on the strong side. And Paul enters with a close on the correct side of the small triggers. from an area. And guys, because of the direction of the triggers, because of the room to targets, Paul's able to take a beautiful $100 trade per contract. Paul, great patience on the entry. Awesome job waiting for the close on the correct side. The spoils of your patience. Nicely done, Paul. Great trade. Strong trending market. So Pete says, check it out. This is 30 plus bars in the same direction. All of my triggers are above resistance, which is more likely to behave as support. I get a pullback, but Pete doesn't have any areas inside of his triggers. And this bar right here. And Pete says, in a strong trending market, one of the things that I understand is everything is screaming up, and it's likely to continue up until it hits something solid. So Pete buys a mid-band. Pete also has a stop behind two areas of Fibonacci support with every trigger line above it. It's outside of the rules, but it is a beautiful chart read because if price reaches support and four triggers are above it and screaming up, support's likely to hold. Beautiful entry. Aggressive exit on the first one because it's not the best of the best trade, and then takes the second one off right at Fibonacci resistance. Pete, outstanding trade. Nicely done. Sometimes, when everything is screaming in the direction and there's absolutely nothing in the way, you can jump in with momentum and make a lot of money. And guys, this is what we call a chili dog trade. This was developed by a gentleman in this room, and it was based 100% on his high probability trend trade study. He recognized that with all the momentum on the large chart, with nothing in the way on the large chart, you can bypass your pullback to an area inside of triggers, and you can ride that momentum. And sometimes it's 10 ticks, and sometimes it's 20 ticks, and sometimes it's 2 ticks. But this became a very consistent trade developed by a Nexgen user, and it's affectionately called the chili dog, and it's based on having momentum and absolutely nothing in the way. Those two core rules that you learn first. All right. Pete, 6263. 6263. So your small triggers, let's see, it ends and you have momentum on the large chart, but your small chart says, hey, check it out. We've already got divergence from a fib. We've got a second divergence potential forming. Your large triggers are up. Everything says this is an area that could absolutely stop the market. Pete goes short into it anyway. That's Pete's right. Puts a stop way up here. Risks an awful lot of money directly into fibs, but he gets paid. So guys, this is one of those times where I'm obligated to tell you, trading into a termination condition is going to work out less often than it works out. So trading into termination conditions, trading into fibs with absolutely no triggers through, guys, is typically going to lose 60, 70, 80% of the time. You don't have to do it to find your riches. But when you develop the ability to read your indicators a little more accurately, when you develop the ability to see patterns that you've seen before, there will be times where your plan changes, where you write out a different plan, and to the new user, it looks like financial suicide trading into a fib. But to the experienced user, it's taking the accumulation of everything that's seen and finding a way to capitalize. So Pete, great trade for you. Probably not a new user trade, but that's okay, because new users aren't new forever. All right, Miss Jen. Small triggers up. Strong side of the small triggers. You don't get in on the pull down because why fight triggers, right? And then you get in on the close above, and that market continues up. And it misses your target by a tick, those sons of guns. So you get paid just shy and break even on the second. Beautiful trade. So my trading view users, small triggers up, strong side of the small triggers, enter on the close on the correct side of the triggers, because once those small triggers turn against you, It takes a little bit of patience. And from the strong side of the triggers, this area is more likely to break than hold. And sure enough, it goes all the way up to trouble. Misses it by a tick. It's okay to put your targets a tick or two below the area that could stop it. Great job, Jen. Nice trade. Everything says up. You've already reached trouble. And when you pull back, you are on the weak side of the triggers, but they're still up, looking for a long trade. You do have room back should they decide to retest trouble. There's your pullback to the mid-band. There's your close on the correct side. There's your entry. Did you wait for it to pull back a little bit to manage risk? Because it looks like it went up and then closed. You get in and you ride it all the way up to trouble at 64, where you get paid. And I'm not sure losing money on the second contract makes sense. Because, Jen, you've already reached the trouble, and you have retested trouble to the tick. Right on. So one of the management lessons, and let's talk about this real quick, guys. If you're in a trade and you're from the weak side, that's your management side. So Jen, you saw a great place to get paid and you did it. I love it. This is where I'll say, if they can get back below this zone, I don't want to be in the trade. I'm not willing to lose money on this one, right? I might even say because they hit trouble and I'm on the weak side, I'm going to lock some in. These minute bars take longer to form. It's okay to protect your investment when problems have been reached. Does that make sense? All right, and then you were looking for the HVA trade to go short, right, Jen? And I love this. Zone reach, rule number 1. Smalls get below the large, beautiful. And then a little color blindness got you. Where the rules say sell the pink HVA, you went short at a green HVA, right at a zone, above the bottom of the zone, and you're like, oh my gosh, that was the wrong trade. And that happens, right? So, Jen, again with management, now is a great lesson. Let's just assume, hypothetically, for poops and giggles, that your HVA line was magenta, right? And the triggers have rolled and everything says down and you've reached your zone and you're looking for that trade. This is where you can say, all right, my HVA is at the bottom of that zone. I'll give it a couple ticks, but I don't want to hold that trade that long because, Jen, if it ends up all the way up here where your stop was, that area is not stopping the market, is it? It's already stopped, rolled, everything's gone up. So you can manage these a little bit tighter, a little bit less risk. Give it 2 or 3 ticks beyond that zone and just say to yourself, if it doesn't go down from the area where it's most likely to go down, I don't want to be in it too terribly long. Does that make sense, Jen? Good management lessons this morning. And then once again, triggers are up. Strong side of the triggers. Okay, we're back here. Price pulls back to the zones, back to the HVAs, but the triggers are down. You have something to bounce off of, even yellow 1-to-1s. So Jen, did you see the post earlier? And guys, this was for everybody in the room. These HVA lines are awesome right off of a termination. These HVA lines are incredible for a momentum style trade. When you pull back and the triggers are against you and you're waiting for the close on the correct side, you have a higher chance of success, guys, if it pulls back to an area, if it pulls back to a zone. If the HVA line is there, and Jen, that's just warm fuzzies. That's bonus. That's one more reason that market's more likely to go up with the large chart right from that awesome spot. Your entry is great. 86, caught it right at the top, right before it closed. You take it up to trouble. Beautiful. get paid, and then you hold. Notice that it doesn't get below the zone. Notice that the triggers don't follow. Great stop placement for the big move because the large chart says big move, and you take it all the way up to the 1-to-1s. Jen, this is a beautiful trade. Great patience on the entry. Great job getting paid. It's a bold hold, but it's based on the large chart and out at trouble. Nicely done, Miss Jen. All right. Large chart. Smalls are up. Weak side of the triggers need to manage. We've already reached all the trouble and come back below it. Price pulls back to the mid-band, back to the HVA. You get in on a close on the correct side. And then Jen, once again, especially from the weak side, if it gets back below that zone, it's probably not going up. Maybe a little tighter management. Right behind the white bar that breaks above. It's a good shot to continue up if they want to continue up. Are you on NinjaTrader 7, Brian? 90-25, 90-25. Yeah, you probably could have been a little bit tighter. Brian, are you NinjaTrader 7? It looks like it. Brian, do me a favor. Get with Jason in Tech. Let him help you roll that. Just put in a ticket. He'll walk you right through it. It's been so long since I've rolled a contract on NinjaTrader 7. I don't know that I could just spout out and give you accurate information. I don't even have NinjaTrader 7 on my computer. Jen, nicely done. All right. Paul. Small triggers are down, but you've reached all the trouble in the world. It has reversed it on the small chart. And you're hanging out. And then you get strong triggers and a pullback to the HVA. Brian, most people are on 8. There's not a lot of people left on 7. There are some people that are still on 7, but most of the world is on 8. NinjaTraders, they're starting to not support 7 so much. Strong triggers, pull back to the zone of the HVA. Absolutely beautiful entry. Paul, are you with me? Beautiful entry. But because those triggers are still down, we've already reached one trouble. And it's retraced. And you caught it on the retrace, and it was beautiful. But because these are still down, even though we're on the weak side, keep your eyes on at trouble. You went break even. I mean, this is a perfectly executed trade. Perfectly executed trade, Paul. It just didn't go. Nice job. All right, first trade on the system. 8 ticks. Guys, I love this. And this is a small chart focus. So large chart says up. Large chart was even on the strong side of up triggers. And then 8 ticks, because he's been with us for a while, 8 ticks is like, man, I believe in momentum. I believe in nothing in the way. So when his small chart gives him momentum, he gets in with that momentum. Good side of the small triggers, and he rides it all the way to trouble. And what this was, everything on the large chart set up, 8 ticks uses momentum from an outer band and rides that momentum back to his long trade. This was the short to get to long. Does that make sense, everybody? I don't teach this trade. This is great use of momentum. Nothing in the way. Takes it all the way back to where his long trade set up. And that's exactly what happened. The market bounced with the close on the correct side, and it did go up a little bit. Nicely done, 8 ticks. Welcome to TradingView. All right, Jen says, this is a tricky spot. My triggers are kind of flat. Large are coming down, small are going up, don't have much room. Bunch of shenanigans. I choose to wait. Great, great patience, Miss Jen. All right. Now, I get to talk about luck a little bit. Triggers are up. And guys, there are two rock-solid terminations. Not one, but rather two. You have a 10-point zone, or 10-tick zone, of absolutely nothing broken. Pete tries to jump in. Just arbitrarily jump in when price begins to get above the fib. That's cool. That's Pete's right. It fails instantly because fibs can stop the market. And then it pulls back and he says, you know what? Because of no divergence, because of strong triggers, I'm going to take a trend trade. I know that there's nothing that says clear path, but because of momentum, because of clearly defined entry, Pete makes the decision to take the long trade. And he gets paid right at the other treble. And he gets stopped out. And he says, you know what? Even with divergence, right at a fib, I'm going to take another trade with a lot of risk. And he does, and he makes a couple ticks, and makes a couple ticks. And this is awesome, right? Guys, if you're brand new, this is not your trading. There are too many moves in the market. There are too many opportunities to have to trade against losses of momentum directly at a fib. And if you took the first one before the small chart started showing change, great job. And then Pete, the only thing I can say is that because you just jumped in here, you lost money on this trade, right? But by waiting for the pullback, it created the opportunity to make money. And a lot of you guys won't see that. If I'm in at 18 and I'm stopped out at 15, 2 and 2, it's a loss. Hey, Mr. Paul. Good to see you. And then Andy V, you got excited about the same thing. Directly into termination conditions, right? But you had two losses of momentum. And you said, yeah, I sure hope this goes up. Let me manage super assertive. And let me get to break even ASAFP. And Andy, you dodged your bullet, right? So one of the things, guys, I don't tell you how to trade. Andy, did you realize? He did. Andy said, my path isn't clear. But with this much momentum, I'm going to take an entry and manage. And look, where did you put? I saw you wrote it on there somewhere. Or maybe it was above it. Manage, manage, manage. I know what I'm up against. Manage, manage, manage. And you did a great job on management, Andy. You knew what you were up against. You chose to manage assertively. And it worked out. And sure enough, it held. And guys, when the fib held and everything rolled, Pete said, man, terminations can reverse the market. Let me go down with odds favorable momentum down to the fib. Pete, I love it. Using the termination, saying I can't go long anymore. I got room if I go short. That's some heads up, great chart reading. Nicely done, Pete. Nicely done, everybody. So guys, that's what the day is going to be. We're going to talk about, woo, look at that. We're going to talk about, holy smokes, that must be what you guys were talking about, the sell. Small triggers are down. Strong side of the small triggers, most current price. If you decide to take a short, you have room to get back to the trouble that's already created two bounces, so you have to be aware of it. Have to be aware that that is there. Renko bars. Termination, like you are getting paid to recognize it. Smalls below the large. Huge gap back to those large triggers. If you took the first trade, you had to manage out as it went all the way up to close the gap to the fibs and the triggers. So give me a Y in the room, please. If you recognize that the background is red, which suggests a downtrend, but your trigger lines are green, which means that you don't have the momentum that you need to push the market up, and you don't have the momentum that you need to push the market down. Does that make sense, everybody? That's your momentum up look. that's your momentum down look. So we're in a little bit of a holding point, a little bit of a wait. Nasdaqery. All right. 2 triggers through. Look what that termination did, guys. Wow. Only 2 triggers through. The biggest killer, ladies and gentlemen, of the potential to break is divergence. The biggest killer of the potential to break is divergence, especially for the new user, because you're not piecing everything together as quickly as you will in 30 days. So, on your KISS plan, when it's only the potential to break, it reminds you 3 out of 4 triggers through is the best, and it says absolutely no divergence on the 5-1. So if divergence kills the potential to break, imagine what it does when you're trading into a termination condition. Something to think about. And sure enough, down they push, but they're pushing right to support with every trigger above, not going short, can't really go long. Guys, look at how Fibonacci is defining the range that crude oil is stuck in. Does everybody see it? Rule number 2 keeps you from losing. Rule number 2 keeps you from losing. Rule number 2 keeps you from losing. Rule number 2 just kept you from losing. Thank you, rule number 2. Pretty awesome. All right, those are our large live chart reads. I'm going to keep going. And we're going to go to the other pictures that are presented. Victor, you said, entered a trade on paper to try to learn to do the second profit target, random place, and this is what it looks like. Amazing. Is it amazing because it's good or amazing because it's bad? Help me out here. I love it. Strong triggers down, strong side of the triggers, close below the triggers. I mean, it's a good looking short. Were you able to put the second contract in? Do you want to do one right now? So for TradingView people, when you want to take partials, oh, hold on, Victor, is it amazing or, hold on, oh man, here we go, or did you have strong side of down triggers, room to trouble, and on the good side of small triggers? It's just going with your charts, man. Good job. I like it. So guys, let's do a quick lesson on partials. This is not a real trade. This is an example to be able to do it. I've got 2 contracts. If I sell the market, it puts me in 2 contracts, guys. I'm going to try and keep the stop loss way out of the way, and I'm going to put my profit target way out of the way. So I've got my target, oop, that's 4 contracts, and I've got my stop loss. Now let's say I want to take half of my position off. I'm going to change this to 2 because I'm in 4, and I'm going to right click and I'm going to buy 2, and I'm going to put a limit order to buy 2. Come get me. So if the market comes down with all that momentum, with room back to trouble, and I want to get paid right at that trouble spot, I can just put a limit order. If it hits my limit order, and of course it's going the other way because the triggers are up, if it hits my limit order, let's see if we can get it to hit it real quick. There we go. If it hits your limit order, it'll cut you back to 2 contracts and 2 contracts. So that's how you're going to take partials. If it hits your stop order, so let's say hypothetically we change that down to 1, and I put a buy limit down here, and it hits my stop order. Hit my stop order, dang it. There we go. You have to remember to cancel out your limit order, or it's going to buy that market when it hits it. Does that help, Victor? So practice it a little bit on TradingView, guys. Work on those mechanics of partials. Because it's nice when the large chart says huge moves, take half of it, get to break even, right? Give yourself the opportunity to make a little more money. And those are lessons. Learn them on simulator, guys. Learn them on that sim. All right, Pete, momentum. Where is 12? 6172. Okay, 6172, 6172. You have room to get to that fib. So you enter just beneath the fib and you get off at the next fib. Nice little snippet. And guys, the one thing I want you to see on Pete's chart, Pete let the buyers try to push up, and then when they failed, that's when Pete entered below the fib. Not jumping in before any sort of reaction from the fib is given. And Pete, I think this is going to be kind of the keys to the kingdom for you. On these getting in, using that language, enter just beneath the fib. The first one gives a reaction, and you get in after the reaction, and I think that's huge. And if you don't have a full bar beneath, waiting for that reaction is advantageous. If you do have a full bar beneath, that's when just getting in below the fib makes a little more sense. Nice trade, Pete. Little base hit. Victor, so if I'm on a sell trade, I put a limit buy where I want it, and if I'm on a buy trade, you put a sell limit. Absolutely. Equal and opposite reactions. If you buy the market, a sell takes you out. If you sell the market, a buy takes you out. Good stuff. All right, Mike M. Someone gave you a hammer arm on this one. Took profit at trouble. Damn right you did. So let's go through it. Small triggers are down. When you entered, you were on the strong side of those small triggers, right into the base of the zone. So you wait for the close on the correct side of the triggers. And Mike, just let me know that you recognize that you had it here, and you also had it all the way up here on that white bar. But probably doing a little patience to let it get below trouble, and then just riding momentum all the way down to trouble. Great trade, Mike. Great trade. I like the patience to get down to the other end of that zone with all that momentum. Nicely done, man. Estefania. I love saying your name. How long should we wait for a reaction? 1 minute candle, or simply wait for the right look? Todd, when you say how long should we wait for a reaction? Reaction to what? Can you show me in pictures what you're talking about? It was a preview. Oh, okay. So that was Ninja Trader, Todd. Hold on. So this is a Ninja Trader thing. This is not a trading view thing. 1 minute bars are too big. This Renko bar probably happened in about 2 seconds. A minute bar, there's way much more going on. It's going to be difficult to do something like that. Yeah, the Renko bars are fast. Estefania. Odds favorable momentum. Not a darn thing in the way. Odds favorable momentum. Jump in. Get paid. Get paid. Estefania. Beautiful. Momentum and path, ladies and gentlemen. Momentum and path. That should ring in your brain all day long. Momentum and path. Momentum and path. John. Oh, there's Mike's trade, right? Pull back to a fib. Close below. Rocket down. Thanks, John. Showing 2 different platforms. When the market says it's more likely to go down, ladies and gentlemen, it tends to go down. All right, Hunter. Hunter, you've taken a couple on the chin lately, haven't you? You've taken some beautiful trades that didn't work. I'm going to tell you, man, I've been new, and I'm going to say this to everybody, guys. You don't get to pick the ones that are going to win. You don't get to pick the ones that are going to lose. But your adherence to rules is outstanding. Odds favorable momentum. Nothing in the way. Two divergences doesn't affect you. Perfect entry. Beautiful stop. And man, Hunter, way to stick to your guns and follow the plan. I don't know if you traded yesterday. Guys, all of you that traded yesterday, that was one of the most difficult days I've traded. It was hard to get a trend to really stick. It was hard to get big moves in the same direction, which meant that those of us that are trend traders struggled for that trend to carry us where we wanted to go. And I know I finished down just a little bit yesterday. You're brain farting this morning? I'll get to you, Victor. I actually ended up down about $200 yesterday. And guys, that's just a part of trading. But when I went back and I looked at my trades and I asked myself, did I follow my plan? Did I follow my rules? Did I give myself the highest chance of success? If you can go back and answer yes to those things, it's you're doing it right, guys. And it's about probabilities and it's about long term. One day is not a bad trading career. One day is a little blip on the radar. Absolutely ridiculous second trade. Oh, Paul, it wasn't just you, man. All right, so Jen, your first trade was a termination. Smalls above the large, buy an HVA, didn't work. It happens, right? They had other ideas right at the open. And then, let's see what happened. The market pulls back up to 52. The market pulls back up to 52. Trying to see what you did. And you tried the long again. And this time with odds favorable momentum, it goes right to trouble. Where did you sell? That was, I see the first long, didn't work. Second trade, all triggers down, momentum sell HVA. Can I disagree with you on all triggers down? Would that be okay? Because I see smalls up and I see large up. So you don't have a momentum trade. What you really have is a pullback to the zone that you're hoping holds. So you sold it, but you didn't sell it until the close below the triggers. So when everything's set down, pulls back to the area, close below, you get in. And it looks like you got back out. I can't tell if you made money or not. It's just all hidden. Held as the small triggers were down on the 15. Have no idea why, but TV added 2. Still learning the system, but it worked out lucky. Right on. With everything down, pull back, close below, and that's where it rocketed down, Jen. So I don't know why it gave you 2, but what a fortunate accident, right? The first long makes sense from the termination, just didn't work. When the termination doesn't work, you go down with everything, close on the correct side, and you get away with one. I love happy little accidents. Nicely done. But notice how when you're short, and it just goes down, and it just screams. Sometimes that's going to happen, guys. Sometimes you're going to take the best trades ever, and they're not going to work. And then sometimes you're going to take the worst trades ever, and they're going to pay you. And that's why leaning on consistency, guys, leaning on having the advantage, leaning on trading a pattern that wins more than it loses is that long-term success that we're looking for. All right, Derek. Not going short into terminations. Not your business, right? Triggers roll. Love it. Smalls get above the large. Love it. No divergence. Strong triggers. Pull back right to the mid-band. This is what we call a momentum trade, Derek, and your execution was beautiful. Entered at 62.01. So you entered up here. Did you enter on this bar, or did you enter on this one where the smalls broke and it snapped back? You had two options at 62.01. This one is the dang it, it's probably going to bounce. This one is the I've already bounced, I'm above everything, let me pull back to it, find the easy trade. The first. So the second is your best look. Does that make sense? Here you're right into the fib. Didn't ever actually break it. Here it broke the fib and pulled right back to it. And that's the Nexgen momentum trade. And that was perfect. And your exit is rock star. Right at trouble. Great job, Derek. Trading with direction, trading with momentum, having room to get to your targets. That's the recipe, brother. That's the recipe for success. Nicely done. Hunter, odds favorable, clear path from a termination, perfect entry, awesome money, didn't give it back. The trading gods love you, Hunter. They said, we took his money on the perfect trade, let's give him some of it back. Nicely done. Caleb, there's that little momentum trade, right? From a termination, all the momentum, snap back to the one-to-ones. If you missed it, there was the other momentum trade. And you got out at what you thought may be a resistance. Caleb, it's a red line running horizontal across your chart right there at 15. That's a perfect exit. If you decide to get out a couple ticks early, beautiful. Great job. Bought the retracement right to the mid-band and the one-to-ones. All the strength in the world. Nicely done, Caleb. Direction and momentum. It's crazy how often that's the recipe for success. All right, Paul. 62 entry. Over here. Okay, there it is. I'm with you. So above trouble, strong side of small triggers, and Paul, it pulls back, gives an opportunity that doesn't work, pulls back to the mid-band. There's your close on the correct side. You've got 1, 2, 3 opportunities. You get in on the fourth. Nothing wrong with that. And then you ride that momentum all the way up to large chart trouble, Paul, because when you're on the strong side of small triggers, these areas are more likely to break than hold. Paul, excellent, excellent usage. Nicely done. Victor, let's help a brother out. Why did I get stopped out? All right, Victor. Guys, I want to tell you a little phenomenon that happens when you start getting good with your software. So, Victor, I'm going to get rid of your annotations. And I'm going to put mine in. Will you work with me on this one, Victor? Let me know what you think. And I just want to see if we can get the same read from the KISS plan, right? Just going from the KISS plan. So first, always large chart. Momentum is strong triggers. And guys, everybody feel free to play along. Did we have it? On the large chart, this is the bar we're talking about. That's the one he got stopped out on and he can't figure out. Absolutely. Chariot, we did. Smalls above the large, space between. That's an outstanding look for momentum. Does that make sense? All right, so we are one yes. And then we ask, clear path. What does that mean? That means that every time price reaches a line, I have to count triggers. So how many triggers are above 62.06? Well, it quit, and it was still there. So I've got 2 triggers here, not broken yet. And I've got 2 triggers here, and it's not broken yet. And I've got 2 triggers here. And it's not broken yet, right? So what am I looking at? I'm looking at a range that extends from here to here that I'm hoping momentum breaks. And that is approximately from 06 up to 18. So that's about 12 ticks worth of I hope. And that's cool, Victor. 2 triggers through. So we're going to say potential. But I want you to also say not best potential. 3 is better. And why is 3 better? Because 3 means that your moving averages, 3/4 of them have already cleared the area. So 3 is better. So if I'm looking for an entry on a medium probability trend trade, and I'm hoping it breaks 3 areas that are iffy, can I force my small chart to be perfect? Right? And Victor, you know that you can. That's your right. So let's go through the entry rules real quick. When a reversal bar prints, the market is most likely to bounce somewhere in this zone right here, right? Areas inside of triggers. If I take the entry, my stop belongs down here where the market shouldn't go, which means that with your entry at 14, is that right? At 14, your stop is about $200 per contract lower outside of the triggers. So it's a high risk entry. Would you agree, Victor? High risk entry. What's one way to mitigate that risk and cut it in half? You could force a reversal bar and then put your stop behind it, but you never got a reversal bar because they had no intention with 2 triggers of going back up. And then Victor, the other thing that you left out of the equation is there is divergence, and your smalls have already returned and started working their way inside of the large, which means that what you're doing on your small chart is you're sacrificing the momentum that you hope breaks the areas. Does that make sense? So you've got momentum on the large chart. It's a really rough look to break, and then your small chart is showing you that it's less likely to break. So how do we get, oh look, and Victor, it was a weak bottom. Wasn't a termination that reversed the market. So there's this phenomenon that happens, guys, and I'm going to share this with you because I have lived it 1,000 times over. And the phenomenon is what I used to call in my professional life outside of Nexgen the 30-day stupid. And I'm not calling you stupid, Victor. Please understand that. But what happens is when we're new, whether you are new at a new job, whether you're new to day trading, whether you are new to anything in life, if you follow a checklist to the letter, the checklist has been designed to make you successful, to give you the highest chance of success. So as you learn to read your indicators, as you learn to see more things and manage more things, this checklist is your saving grace. Now, if you print this checklist out and have it in front of you when you take this trade, the first thing that you'll notice is that you didn't have 3 or 4 triggers. So you already know that it's not the best trade. And it's not from a strong top or bottom, which means it's confirming that this may not be your highest chance of success. You did have momentum, but the smalls weren't outside of the large, and divergence printed. So guys, by following a simple checklist, by giving yourself the highest chance of success, following a checklist that has been proven to win more than it loses, you can avoid losses like this. So I don't know if you have your checklist printed out in front of you, But I give myself two options when I trade. Either my checklist is met or it's not. And guys, you will change your checklist as you grow with the software. But until you're capable, it's a bacon saver. Hyper focused on the momentum. But Victor, I don't believe that you were even focused on the path, because 2 is iffy at best, right? And look at how many areas weren't broken when you got in. All the way from 62 flat up to 62.20. That's a lot that you're hoping that momentum breaks. Great picture, man. Great lessons for everybody. Great lessons for everybody in the room. And guys, this is one of the cool things about what we do is there are no right trades or wrong trades when you're learning, guys. There's rules met and there's rules not met. Odds favorable, clear path. You get in, you get paid, you get break even on one bar, Hunter. Oh my gosh. Talk about great entries. A tick above the area inside of triggers, makes $100 before it ever produces a reversal bar, goes break even on the trade because that's what his plan says. That is outstanding. What happened after? That's what I want to see. Let's go to the S&P real quick. After you make $100, it pulls back. And I don't know if that would have gotten you or not. That would have been close. But with momentum and path, oh, there's your 3 divergences. Hunter, that was awesome. My video's not stuck, Jen. Your video is stuck, silly. Here we go. Thank you for telling me. Is that better? Hold up, here it comes. Boom. Is that better? Do you guys want to see something amazing? Hunter made $100 right here in one tiny little fluctuation. That's awesome, Hunter. Good job following the plan. And I think they've just about paid you back for that loss, which is awesome. NASDAQ yesterday, 0 points all morning, 15-minute chart. Thank you for sharing that, Mike. Guys, remember when I said yesterday didn't trend very much? And it was a difficult day if you're looking for trend trades? From zone to 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 zone. Didn't break. Didn't break, didn't break, didn't break. Back up. Didn't break, didn't break, didn't break. Back up. Back down. Man, how hard is it to take trend trades if the market isn't trending, right? How hard is it to take trend trades if the market isn't trending? Thank you for sharing that, Mike. And we made it through pictures, didn't we? We made it through pictures. Guys, there is one termination condition that I accept on a small chart when I have odds favorable momentum and a clear path. And that is 3 divergences in the same price range may push the market deeper, may push it lower, may create a loss. 3 divergences in the same price range can terminate a trend. That is the only time I will skip out on a mid-band inside of triggers when I have momentum and path. Does that make sense, everybody? The only look. So if you took it here, you probably made some money, got out break even. If you took it here, you probably made a couple ticks, got out break even. And then when that 3rd divergence printed, you said, you know what? It's not my money. But if the market's really going to go up with momentum and path, guys, these small triggers are going to roll up just like that. And when they roll up, you're going to see it start to shoot up. And you may have what's called a continuation entry. And a continuation entry is pretty awesome because what it says is that you fully understand. I have a picture. Hold on. You fully understand that 3 divergences can mess up your good time. But when everything rolls and everything goes strong up again, you may be able to find an opportunity. And when everything rolls and everything heads up again, you may be able to find an opportunity. And it's dependent 100% on not losing momentum and path, guys. Good stuff. All right, new users. New users, talk to me. How are we doing? TradingView users. Everything starts with the small triggers. They're down. Where is the most current price in relation? Right between transition and strong. Is there anything in the way? Without question, there is a zone in the way, which means I want to get below it before I look for an entry. S&P. My triggers are strong. I'm on the strong side of the triggers. I'm pulling back into my zones. Look at the strength on the small chart, forcing you into patience. Look at the strength on the small chart saying, don't you do it, not yet. We are screaming down, don't fight us. We will take your lunch money. Crude oil, strong side of up triggers, nowhere to go. How is that for a spike? If you were waiting for a close on the correct side of the triggers at 05, guys, you went straight to trouble on one bar, probably not an opportunity. Even gold. Small triggers are up, strong side of the small triggers. Room to trouble, what's the small chart look like? Pull back to the area, the mid band. There's your close on the correct side of the triggers. And there is gold, continuing up with strength and room to trouble. And we can see where all the stuff in the way is. It's a rinse and repeat scenario, guys. It is the same thing over and over. I have momentum. Look at that, 3 divergences in the same price range. I have 2 triggers through. Divergence is already print, and it's a weak top. Victor, how do we feel about a weak top, only 2 triggers, and divergence? What does your checklist say? Mine says be patient. My money's worth a better look. No momentum, no clear path. My checklist says my money is worth a better look. Does that make sense, everybody? And on that note, it is 10:30 a.m. I'm going to take a break. I want you guys to tell me what we're going to talk about next. I want you guys to post charts, even if it's not a trade. Ask a question. And we'll just keep doing the live chart reads, guys. We'll keep going back. If I end up with momentum, if everything continues up, guys, I've got acreage for them to give me the perfect trend trade, right? If this ends up holding, I have to get below trouble, but then I got nothing but clear path. So I'm going to let the market tell me when it's time to trade. I'll see you guys in a few minutes. Education process, guys. Sit in a room, right? Listen, practice, participate. Live chart reads. I don't tell people when to trade. I don't give trading advice, and we don't tell you when to take a trade, right? It's about reading indicators. One of the cool things about this classroom is that we can say, I don't have momentum on my large chart. And then I can ask you guys, does that make sense? No momentum on the large chart. Smalls are inside of the large. And then you have the option of, you can put a Y in the room. You could actually put an N in the room, and you could say, Mark, help me out here because they're both green, or I thought that that was momentum. And then from there, we go back to the idea of how momentum is defined. Help me out. And I'm thinking here, I'm trying, how do I make it easier? How do I make it better? How do we get it to where you guys can get to where you want to be the quickest? Hey, Rohan, great to have you with us. Great to have you with us. There's one look for momentum in an uptrend, and there is one look for momentum in a downtrend. How do you get to where you never mess that up? Guys, I haven't given this document out in a while. I'm going to give it out to my NinjaTrader users because I think what you're going to find is that if you really want to get to where it is you told us you wanted to be the fastest, guys, start taking pictures. Start taking pictures. Look at your large chart and identify momentum and path, guys, and get so good at momentum and path. Get so good at never doubting whether or not you have strong triggers. And when you see weak triggers, it's okay to choose not to enter. And get so good at counting triggers that you never question whether or not you have a clear path. And guys, use the spreadsheet. The spreadsheet, I'm going to drop it in the room right now. Put your pictures in there. Put all of your pictures in there. And if you don't understand your pictures, drop them in the room. Ask for a little help. Let me get the spreadsheet for you. Trading, we make it way more difficult than we need to. I think personally. So guys, start taking pictures. Keep it simple. And if you don't understand why that's not momentum and you don't understand why that's not a clear path, the two core reasons, talk to me. Let's have a lesson. All right, Miss Jen, let's see what you did. At the time of entry, above the yellow 1-to-1s, right side of the triggers, room to the zone. Buy when on the correct side of triggers. Your 1-to-1s are at 70, right? Where's 70? 70 is down here. All right, so it pulls back to your 1-to-1s. You get in on the correct side, and they just can't get through the zone, can they? Just can't get through the zone. And when they can't get through the zone, you get stopped out, Jen. It's a good shot at a long trade. It's a good shot at the long trade. You're coming from the termination. You realize many spikes at the zones on the 1 minute. Yeah, so it tried to break and couldn't. It tried to break and couldn't. It tried to break and couldn't. And then it tried again and couldn't. And see those tails where they try and fail, Jen? You've got 4 little tails off those bars where they could peek their head above and just couldn't. And then once they can't, like by that 4th shot, no, I mean 3 divergences is still 3 divergences. But those tails tell a story. Because every time you get a tail, let's go over here. Let me go find one where there were some tails. Yesterday is probably a great example. The tails tell a story. So this is the big chart, right? Tried to go down and failed. 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 So what you're seeing is you're seeing a very real, the market just can't get through and continue past. Tried all of the failures, and then when it finally does, it changes the picture. So you can use that on a smaller chart. Yeah, you can use the lessons on a smaller chart. That was a good looking short trade, it looks like. And you can see those. So if there's already been 5 or 6 spikes into it, it's okay to let it break. And I think that's just getting more in tune with the minute bars. Your trade makes sense based on the advantages. And it's tough. Using the zone, I'm trying to see if there's a way to manage better. Maybe that last ditch effort right there off of the zone. Could have tightened it a little bit, but not much. It is. It's not second nature yet. There's still times, Jen, where I get really excited about a trade, and I have to just stop and back up real quick and go through my checklist, because your brain will start telling you it's perfect. Your brain will start ignoring everything but what gets you into a trade. There's your pullback. There's your close above, and they just couldn't get through that damn zone. They wanted to, they just couldn't. And what did they end up doing? They did end up going down. I had an HVA line there too. So I had a zone, I had HVA. And if you were going to go up with it, that was the spot. That was the spot, right? And your stop makes sense, Jen. This is the area that stopped the market. This is the area that created the bounce. This is the area that I want to hold. And it didn't. And that's got to happen sometimes. And then once they get back below 70, below those 1-to-1s, then it's pretty much game over. Just some emotional fluctuations. It happens. So how are we doing today, guys? Look at that. With no momentum, no clear path, the market pushes down. Everybody recognize 3 divergences in the same price range? You are, Jen. I'm not. How cool is this? Into the termination, giant reaction back to resistance, and then the market continues back down. Pretty neat. And then there's the Pete trade, right? Starts to break. Tiny little reaction when it gets back below. Giddy up, down to 58.25. Pete's gotten famous for that one. I know a lot of you have heard of Mark Douglas. John Novak worked with him in the 90s. So a lot of the way I've been teaching comes from him, because I've been introduced to him from the beginning. I ignored it in the beginning because I'm too smart. But talks about trading being probabilities, guys. Nothing more than probabilities. You'll never know what's going to happen in a market. You'll never know if you're going to win or lose. You never know if everything is going to go wonderful, or if it's just going to turn against you and absolutely wipe out your trade. You'll never know. And the sooner you accept that, the less mental anguish you create for yourself. But what you can do is work probabilities. And probabilities say that when I have strong triggers, when my path is clear, if I choose to enter the market at an area inside of triggers on a smaller, faster chart, the probabilities say this is a trade with the potential to win 70 to 80% of the time. Does that make sense, everybody? I don't know if it's going to win. I don't know if it's going to go up to trouble. I don't know if it's going to stop me out. But what I do know is that I have an edge. And the pattern is repeatable, and it's more likely to go up than down. And I know exactly where my edge is no longer in play. So what happens is if you take this trade 10 times, one trade, two trades, third one's a loser, right? Fourth trade, fifth trade, sixth trade, seventh trade, eighth trade, ninth trade, 10th trade. That's probabilities. I know I'm going to lose. I know I can't win every trade, but if I am consistent to the methodology, if I am consistent to the edge, if I am consistent to the entry, to the management, I can use those probabilities and know that over a course of time, 20 trades, 30 trades, 40 trades, I'm more likely to be successful than not. So that's what the whole room is, guys. All triggers down. You entered after the close on the correct side. Mike, a little misunderstanding of rules. Try to see 603. Try to figure out where you're at here. So you had room down, it looks like. Strong side. So close on the correct side. When we talk about that, Mike, we're talking about a pullback to an area and then a close on the correct side of the small triggers. Not just a jumping in for the fun of it because I get a close on the correct side. Because what happens very often is the market retraces and pulls back and closes on the correct side and gives you the exact same entry with the pullback. Do you see it? You're in at 28. Look where the close on the correct side of the triggers is. Pretty cool, right? And then it's just Downsville, population U. And as long as they get through the bottom of that zone, it's good. So jumping in is tough. Jumping in, you're always in danger of that retracement. When you just jump in, and we'll look at it here too. So if you just jumped in right here saying, all right, it's a close on the right side, sure enough, the pattern repeats. And man, that is such a common one. Let a bar get through, right? Let a bar break through. Let it pull back. It's crazy how it changes the effectiveness of the trades. What you did is you had everything screaming down, and you just wrote it, and I love it. You did it. How did you manage? That would be the part that I would ask. How did you manage this retracement? And you don't have to answer in the room, but that's one of the things that the close on the correct side of the triggers gives me. So check it out. If I just jump in as price peaks below the zone, doesn't it make sense that my stop would go just above the zone? I want that to hold. I want it to continue down, which means that you probably get stopped out of the trade, which is okay. It happens now and then. But if I get in after the retracement with the close on the correct side, now I've got something to put my stop behind. Now I can see where the buyers tried to go up, where they failed, where the market continued down. These are harder to manage. And I'm not saying it's a right trade or a wrong trade. Everything was screaming down. But they're more difficult to manage, I think, than is the little pullback. And you even had a momentum trade pull back to the area with all the strong triggers. And even that one failed and turned into the close on the correct side. So management's one of those things that I think about. They say that the most successful traders, the most consistent traders, manage risk before they ever manage profitability. And I think those little patterns are a great way to do that. Man, somebody lit a fire under the S&P's butt, didn't they? Woo. Did it to the NASDAQ too. Still waiting to see what they do on crude. You do have 3 divergences. No reason to go up. Got a little space to go down if you try to go down, but not much. Crude oil's not playing nice today, ladies and gentlemen. I feel very comfortable saying that. Remember, if crude oil's not giving you what you need, you can always go to the S&P. I'm going to show you a little life hack for you guys that are starting to understand the rules. And I'm going to just go back to the rules that we talk about every morning. And let me know if this is helpful for you. If the recipe for a trade is momentum, path, and entry, right? I want to look at what happened on the S&P on the way down. And we're going to talk about this bar right here. Does everybody see, NinjaTrader users, that I do in fact have momentum? The smalls are below the large. Everything is down. Everything is wide. Life is good. Do you see it? Cool. There's nothing in the way. So my core values are met. My core rules are met. I do have momentum. I do have path. The one thing that happens when a market is screaming in the direction is you do get, there's an area right there. It's right at 56.50, which means that 5 ticks is kind of a high tick scenario, right? The market pushes back a little bit through it, and then it continues down, and then it pushes right back to it, and that one doesn't stop you out, and it continues down. One of the things you can do, guys, is when the large chart rules are met, but the large chart or the small chart isn't perfect, these confirmation bars, this down bar, this reversal bar in the direction of your trade gives an opportunity. It gives an opportunity for you to go with the momentum, to go with the path, and have something to put your stop behind. So sometimes when you look at a chart and you say, all right, I've got momentum and I've got a clear path. Let's go to the one where we talk about advantages. But I don't have an entry. I can't define where the market is most likely to continue because maybe I'm on the wrong side of triggers. That's where you can use that idea of a reversal bar to help you with an entry, to help you get into the market, to trade with those large chart advantages. Just a little cheat code. So for example, right now, if I were thinking I want to sell a mid-band, it's a strong trending market, everything says down, I've got room to targets, I want to go down with the large chart. What you could do is you could say, okay, bounces typically come from areas, but since the area is on the wrong side of my retracement zone, in order to enter the trade, I'm going to force the market to reach the area and then start down with all the large chart advantages. Does that make sense, guys? And what happens is when you focus on the basics first, when you start to understand those 3 simple concepts, momentum, path, and entry, it opens the door for you to get a little creative, to know what you're up against, to know that it's not perfect. And a lot of you will rewrite your trading plans over time to find a way to capture some of these moves that you don't find yourself capturing right now. Do you guys want to see if it works in a strong trending market? So here they come. There's your mid-band. I'm on the wrong side of triggers. So the only way I will ever take a trade is if it gives me a reversal bar. So what I'm going to do is I'm going to wait, and if it gives me a reversal bar from the area, I'll enter the trade. My stop will go just behind the reversal bar, and my hope is that this strong trending market continues all the way down to Fibonacci support. Are you guys with me? So if I get a reversal bar, my stop is defined, my path is clear, my triggers are strong, I'm just not arbitrarily jumping into the market. I'm forcing my small chart to get back in line with the large chart because I'm in control of my entries. Nobody can force me to jump in at a mid-band. Nobody can make me go short if my entry rules aren't met. I see what's good, I see what's bad, and I make a decision based on the advantages that I see. Pretty cool, right? You're in control, guys. You're in control. So we're going to see what happens. Are there any questions? What do you guys want to talk about? Guys, if you're brand new with me, it's the same thing every day. What's good? Can I find a way to make money with what's good? Momentum is great. Can I find a way to make money with momentum? Not having anything in the way is outstanding. Can I find a way to make money with momentum and nothing in the way? The answer is typically yes. Have you guys noticed that you haven't gotten a reversal bar yet? You don't have to jump in. And there's a point where when I get too far beyond the things I want to stop, I might just say, well, I'll wait for something better. Because something better is always coming. There's always another trade. The market trades millions, billions every day. That's the automated system. Check it out, guys. Strong triggers. Does everybody see it? Nothing in the way, room to trouble. And it's looking to buy a pullback? Pretty cool, right? I was listening to John talk to some people. No, Brian, not at all. Excuse me. So, Brian, that's a great question. We're going to do it two ways. First, what we're going to do is let me know if you understand that any horizontal line on your large chart could stop a market. These are where decisions are made, right? So the first way, when we talk about nothing in the way, and we had this talk yesterday, and this is a good one. So nothing in the way means that I have room before I hit those yellow 1-to-1s. So if I enter a trade, Brian, I want to enter far enough away that I have room to get to that trouble. Does that make sense? And let me show you the perfect picture. Bum, 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 bum. I don't know why I bump to you guys, but I had to. So check it out, Brian. And everybody in the room, this isn't just Brian's lesson. It can be. Everybody close your eyes. So Brian, when it's time to take the trade, do you see how the market is all the way up here at 97.05? And you're thinking to yourself, and this is usually where people are going with this question, but Mark, I only have 8 ticks before I hit trouble, right? I only have 8 ticks. That doesn't feel like a lot of room, does it? Is everybody with me so far? But here's the cool thing, Brian, is you're not entering at 97.05. You're entering at 96.87 at the pullback to the area inside of triggers. And because you don't just jump into the market, that 8 ticks turns into about 32. So your $80 of potential turns into about $320 worth of potential. So that's one way you're going to gauge it. A termination is not a termination until price reaches the area. So Brian, until the bars hit that pink line, this is a target if you find an entry. Does that make sense? So if hey, look, you got your reversal bar. Until price reaches this blue line is a target. That's the first part of the lesson. So gauge your entry and the room to make money, or from where the entry is in relationship to your target. Now here's the other thing, and we get this a lot. All right. You're going to like this one. Here's the second half of it. Price reaches, yellow 1-to-1s. The rules say no more long trades, right? This is an area that could stop a market. This is an area that could create an untradeable bounce. This is the market that could reverse the market completely. Is everybody good with that? What new users like to do is they say, well, from here at 64.65, I have plenty of room to get back to that termination condition. Has anyone other than me done that? I've got tons of room from this fib to get back to the termination. Plenty of room to make money. Let's go back to it. And let me show you why terminations are in fact termination conditions and why it says no more long trades. 68.75. Let me line up my price bars real quick. All right, so there it was right there. Guys, give me a Y if you understand that the market said absolutely no more longs into a termination condition. That's what rule number 2 says. Don't trade into the area. Is everybody with me? I've got all the momentum, but I hit a line, all the triggers are below. Your brain is going to say, you have room back to that termination condition if you just get in on the pullback to the area. Rule number 2 says no more longs. Let it break. Let the area that stopped the market break rather than trading directly into it. And I have seen people, I have seen people try to take this momentum long and lose. And then they say, well, then it must be a trend trade, and they lose. And then they say, well, I guess a reversal bar from the middle of nowhere is my entry signal, and lose. And guys, I've watched people blow out $800 to $1,000 believing that they had room back to trouble when rule number 2 said don't trade back into trouble. Does that help a little bit, Brian? And maybe you guys that are saying, I'm going to take that last ditch effort because it looks like a trend trade on my small chart. I'm going to take that long trade because it's at an area inside of triggers. Guys, rule number 2 is designed to have you avoid that heartache. And some days, rule number 2 is going to feel like it's creating more heartache than it's alleviating. But what happens is decisions are made at these key areas, guys. And they do break out of key areas. And they do give the perfect potential to break. And they do offer opportunities in between these areas. Trading away from these areas. Trading to the next area. And you know precisely where these areas are. And if there are no areas, like this where you had momentum and path, you have a set of rules to help you identify on a smaller, faster chart what it looks like when the market may reverse from the middle of nowhere. 3 divergences in the same price range. So, guys, if you haven't reached a line, gauge your profit potential based off of the distance to the next line. If you've already hit the line, it's okay to not trade back into it. That was a great lesson. Thanks for the question, Brian. I hope that made sense. And they make it all the way to Fibonacci. And they don't have the momentum. And all of the areas are on the wrong side of the triggers. Do you guys see it? So let's go back to the basics. Small triggers are inside of the large triggers. Does everybody see that? NinjaTrader users, we're teaching you how to be just magic 8-ball shaking maniacs. I don't have momentum. All of my triggers are below the fib. We have a clear path, don't we? Nothing but Downsville. Guys, by the time we get up here, we're on the wrong side of triggers. And once you get to the wrong side of the triggers, you don't know if, when, or where. So if you chose to enter at the fib, you took a tiny little hickey, maybe 5 ticks, maybe 6 ticks, and that was it. Because when you don't have momentum, the market's more likely to retrace. And that's why I encourage you guys, go back to momentum and path every time. You'll be astounded at how easy it becomes to find trades, and trades that win more than they lose. John says you have a rule too using TV charts that saves your butt more often than not. Let me read the words. With rare exception, in a range, when the 15-minute triggers are strong, never ever go the other way, no matter how good it looks. Using the simple rule, if both triggers are down, never try to go long if the A3 triggers are down. Just shorts or waiting is the only thing. Absolutely perfect. Oh, thank you for that, Todd. I was about to go to it. So Victor, off to the side here. The one with the brush is going to be like your arrows, your rectangles, your circles, your ellipse, your polylines, your triangles, your arcs, your curves, all that. And what you can do is you can favorite. So I put a favorite here. Let me unfavorite them real quick. So what you can do is you can unfavorite. Whoops. And then when you come through and you say, hey, you know what? I want this to be a favorite. The rectangle, I'll add it to my favorites, and it'll pop it up here so it's like real quick. So Jen, what he's saying is when you have odds favorable momentum, strong triggers, screaming down on a 15-minute chart, that HVA is less likely to work. Does that make sense? When it is absolutely railing both triggers down, your HVA is less likely to work. What's the opposite of that? When you get to an area and you start transitioning and you start getting to the other side, it's more likely to work. So with odds favorable momentum up, let's put a box on it, or a circle, or a smiley face, right? Let's see what that looked like on the small chart, and maybe this will illustrate what John's talking about a little bit. I love going back and looking at what did happen. So when it reaches that area, Jen, with all that momentum, the area holds and it bounces, and it holds and it bounces, and it holds. And then once everything rolls down, that's when the market really starts going down. So John, I've been studying this, and maybe maybe I can teach the master something. If it is strong triggers in, you have a better chance if you let both triggers roll down and get into either a transition or a weak side. Soon the student will be the master, guys. So Jen, like here, 15 minutes are crazy strong down. But Jen, your HVA is also on the wrong side of everything. It's below the outer bands. It's below the outer bands, right? This is a strong trending market. I want to see some goodness before I try to fight this look. Does that make sense? Great picture, Jen. Great picture. That's a great picture. Here's a cool pick of today. Shorts only, how many fibs and strong triggers on the 34.5 will make you money? From the fib, and it goes down. Below the fib, pull back. Below the fib, pull back. Over and over, huh? HVA. So, Mr. Paul, an HVA is a high volume area. And let me pull in and I'll show you an example. And we'll use this as an example. Actually, we'll use it right here. And let me go back. So everything is down on the chart. And I'm going to show you how this works. So what happens, Mr. Paul, is these white bars are what we call breakout bars. And if a breakout bar is confirmed by a down bar, it creates a magenta line. If a breakout bar up is confirmed by an up bar, it creates a green line. So the way these HVA lines work is, and I like this, I was talking to John about this earlier. The white bar says we're breaking up. The next up bar really just says, yeah, you are. We're confirming the breakout. And that's what creates this green line. So when the rules are met, this green line is like a line in the sand. And what it says is this is the line where the highest concentration of buyers were collected. And very often, if the rules are met, Mr. Paul, when the sellers try to test it, a pullback to the HVA, if the rules are met, that green line is that line in the sand. And that's where the buyers unload, where they said, we wanted this market to go up. And you can see it right here. The HVA line prints, and let me use my picture here. And they get below it, and they get below it, and they get below it, right? And do you see the strong triggers, Mr. Paul? Smalls below the large, everything is screaming down. The buyers said, we really want it to go up. And look at where they stopped. With all that momentum, right at that pink HVA line, where the sellers already told them we want to go down. So this is your HVA momentum trade. Using that line in the sand with strong triggers to sell the market and continue with the large chart. Does that make sense? So we have in the trading plan, for TV, for TradingView, we have an HVA trade, and that uses that HVA line from a termination condition, which means that when your large chart reaches trouble, when your small chart triggers roll and get above and creates that good look, you can buy a pullback to that HVA line trying to take advantage of a termination. That's the first look. And then the other look is what we call the momentum trade. So with those strong triggers, I don't know if this is from an HVA. If I had an HVA line here, because everything says up and nothing in the way, I could buy that pullback to an HVA with all of that momentum looking to continue up. So there's two ways that we use it, but all an HVA line is it's a line in the sand where the highest concentration of sellers came from a reversal in the market. You're welcome. Great question. Great question. Let's get back to the current market real quick. And we'll see if there's any. There's your termination, and this is not your best look, but check it out. Smalls are above the large. From the zone, Mr. Paul, they pulled right back to that green line, and that seems to be where they're starting back up. Now this is a little more aggressive because of the strength, but it doesn't change the fact that that green line is precisely where that up started right after the market reached a zone. Pretty cool, right? John, with everything going down, it makes more sense to look for a short trade than it does to try to go counter trend. Just two charts working together. Nice one, John Novak. And now there's your breakout bar to the upside. And if this is an up bar, Mr. Paul, we'll see a green line come right off of this high volume area on the bar. So if this bar finishes up, we're going to see another green line. And against this strong trend, with these triggers rolled, there's a good chance they'll come back and retest it right around 45.75. So we can watch this come to be. 90% of your day, ladies and gentlemen, is doing nothing. 90% of your day is sitting on your hands. And if you get good at that part of trading, if you get good at the idea that every tick isn't your tick, that every move isn't your move, that every dollar isn't your dollar, you start finding more dollars because you start finding your dollars, where the advantages are, where the good stuff is. And then John, I had a zone. Maybe you took yours off for the illustration. But Paul, there it is right there. There's your zone, right? Now we're on the weak side of triggers. Small chart says odds favorable momentum. And your momentum trade says if the market pulls back to that green line, guess what? I want to go up. I want to try a long trade. And I'll look for this HVA up here, this mid band, as a potential target. But it's literally a line in the sand placed by the buyers. You guys want to see if it works? It's still strong triggers down. But now we're in that transition weak side. We do have the HVA. We do have strong triggers up. We're back inside of the outer bands. This is a good look to see if we can catch the bottom, guys. But we are trying to catch the bottom, which means that even with a good look, it's okay to not take 17 of these, hoping that that bottom is the bottom. For me, this is kind of a one and done, one shot. And then if it gets all the way up here to 89.50, right at the mid band, I could look for a trend trade to go with the large chart. And if I don't get my entry, guys, it's just not my trade. But that's how, when you know your plan, you will call your shots, guys. And there's two schools of thought. There's people that say you can't predict what the market's going to do. And that's true to a degree. You can't be positive about everything that the market's going to do. But you can predict where the most likely spot for a pullback is. You can predict where your best entry comes from. You can predict with the look whether the market is more likely to retrace up or whether it's more likely to go down. And then you can follow a very solid plan that gives you the advantage. And we kind of provide all of that. So if you're not where you want to be yet, don't beat yourself up. It takes a little bit. There's patterns to learn. They usually come back and get that line just to stop everyone out before finishing an up move many times. And we know right where it is. We know precisely where they are most likely to return. We'll leave it in there. Hold on, let's go 2 lot right. We'll put a limit order just a couple ticks above it. All the triggers are up. Weak side of down, small triggers coming from a zone. You can even set your stop loss in. You can say, all right, if they get, I don't know, below the white bar that created my HVA, that'll be my stop, right? That's a lot of risk. That's probably way too much. These are big bars. Give it $100, right? Give it room to hit, to tap, to be there, but a lot of risk. We'll see. They may not come get us. And then, Mr. Paul, they made it, didn't they? Confirmed with an up bar, created the green line. That's your line in the sand. Pretty awesome. Your HVA is different than mine. Could be tick data, Mike. Probably just a tick data thing. Did anyone else get the higher HVA line? That's an awesome trade. Gotta be a tick data issue, Mike. Because mine was mid-bar, yours was a little higher. And Mike, your trade is 100% solid. So, Mr. Paul and everyone else, do you see how they did, in fact, pull right back to the HVA line? And that's where they started back up? How awesome is that? You have a checklist to catch that trade. Yeah, John, you and I have the same ones. Mike paid extra so he wouldn't miss trades, I guess. I don't know. So guys, this is one of 3 trades. This is going to be the least taken trade. Most of your trades are going to be momentum trades. Most of your trades are going to be pullback to areas, trading with the large chart. But every now and then, you're going to get an HVA. So here's one challenge. Guys, this was your HVA at 45. The market made it all the way up to 73. All the way up to 73. Guys, a pullback to this HVA means that your triggers are going to be against you, that your smalls are going to be below the large. The HVA trade is off the table. The HVA trades typically happen very, very close to the termination that creates them. And then once you get to the higher HVAs, that's when you're doing it like Mike did, with strong triggers, buy the HVA. That's a momentum trade, not a high volume area trade. Does that make sense? First, it's the termination. This is your HVA trade, very close to the termination. Once everything starts up and you have momentum and the path is clear, Mike takes it as the perfect momentum trade. And he's looking to get up to 78.50. And woo, they came close. They came close. Good stuff. What do you want to talk about, guys? We did our reads. We watched it. Weak bottom. 2 triggers. 2 divergences. Huge risk. Anybody hoping for the long trades? Didn't make it. Stopped out. It's all right. You still made money, right? And Mike, here's the cool thing. Dude, it is so counter trend. Strong triggers. It's short-term momentum. Short-term momentum. And very often it's the long to get to the short if they make that mid-band. Does that make sense? Because this is down, because these are strong, it's still all down. And that was your long to hopefully get you to the mid-band where I get a close on the correct side of triggers to trade with everything to go back down. Just to continue the trend. It was a great trade, Mike. Awesome job. Awesome job. Look at this nonsense, guys. They're in the same spot that they have been for how long? That's 2 bars on the large chart. If you're a crude oil trader, you are absolutely bored out of your mind. You are bored out of your mind. Derek hates money. Derek says, I know I don't have momentum. I know I don't have a clear path. I know I've got 1, 2, 3, 4 divergences in the same spot. That's a tough look for entry, isn't it? But Derek is a good student, and Derek said, Mark, every one of your triggers are above these fibs. If I had to wager 38 cents on whether the market was more likely to go up or down, I would say with everything pointing up and every trigger above fibs, it's leaning to the upside. They just haven't given me an entry yet. Does that make sense? There's just nowhere to go. But do you see how all of your triggers are above the fib? It's leaning up. Derek, you were 100% right. It's leaning up. I know you were being silly. So how do we take advantage of it? Let's get just a little more push. Let's get just a little bit beyond all of this stupid stuff and see if we can't find a way. See if it gives us a way. It might. It might not. I don't know. But with every trigger above the fibs, at least we all know that shorts are financial suicide, right? That shorts are the least likely. Does that make sense to everybody? Derek's like, this classroom needs a lesson. Thank you for that, Derek. There are a million lessons in the market, guys. 2 triggers with 3 divergences. Barely even 2 triggers. And it's from a bad bottom. You guys want to see what happened last time we had a bad bottom? The market continued down. And when we had a bad bottom, the market continued down. And we had a bad bottom, and the market pushed down. And that bad bottom, they tried to push back down. And that bad bottom, they tried to push back down. Pretty cool. There's a reason that on the 50-50 trades, guys, we really want a strong bottom. Because if it doesn't get the fib, if it overruns the fib, a lot of times they're looking for the next fib. And they may not make it, but it means this trade's less likely to work, which means, hey, avoidable losers. All right, small triggers down. Weak side of the small triggers. Didn't have momentum to take a short trade from the HVA because my large triggers are still up, and now my small triggers are rolling. And Mike, they're going to try to get to your target. They just didn't want you with them. They had to drop some dead weight. Not one rule met for a short trade yet. And the only rules met for a long trade have already ended. So now we're at a mid-band. And the rules say if the small triggers are up, we need to close on the other side of the triggers from an area, and we're nowhere near getting that. So maybe I just need to sit tight for a minute. Wait for a minute. Be okay not being in every move, right? S&P, they did pull back to the HVA after the termination in the transition, but we're not just arbitrarily buying the HVA because it's odds favorable against. I believe that may be closed on the correct side, maybe not quite. And now they're pushing up. Straight from that line, Mr. Paul, that you said they were going to make if they just got confirmed with an up bar. Crude oil, weak side of up triggers with absolutely nowhere to go. And look at what it's doing, guys. Bing, bang, boom, bang. All right, this is where my brother sends me a text and says, hey, shut up, make them ask questions. So guys, I'm going to shut up and let you guys ask a few questions, let you guys post a few pictures. So I'm going to mute. We've got about 30 minutes left, and I am glad to use every minute of the 30 minutes, guys. Ooh, Ollie, I see you typing, and I missed one, didn't I? I missed one. Man, that totally sparked it for me. So let's see what happens. Odds favorable, clear path, entry at the area, inside of triggers, both targets hit. I'm glad we didn't miss this one, Ollie. How many ticks do you use for your stop, can I ask? You were in at 56.50, and it went up 6. Oh, so you use 12. You don't use the idea of where the market shouldn't go. You say, I'm going to give it breathing room when everything says down with a clear path. That's your right. I like it. Great trade. Great trade, Ollie. pretty quick $300, wasn't it? Nicely done. I'm glad we didn't skip that one, guys. Momentum and path. Find a way. Beautiful. You did that because the mid-band was far away, so you're like, strong trending market, mid-band holds a lot, let me get to the other side of it. Isn't it funny? You guys that have been with me for a while, isn't it funny how you think about what you see now compared to how you saw it even 3 or 4 weeks ago? How you see the distance to fibs, how you see the momentum, how you think about divergences, how different it is, even a week in compared to how it was when you first walked into my room. Guys, that is the path. That is the path. The path is understanding some basics, and then you go through the idea that you can always be a little bit better, that you can get 1% better every day, every week, every month. I used to post this in the room, and since nobody's posting, we're going to talk about it anyway. Let me see if I can find it. Here we go. So I used to post this in the room every day before we started talking about charts, because guys, the fear of missing out and the feeling of being left out is so real among new users. The market's going without me. What did I miss? I didn't get paid today, but 8 ticks did. What did I miss? Jen's in a short trade. I didn't see a short trade. And you start just panicking because you're not where they are. So guys, the key to everything is foundation. Building that solid core. Building that very basic understanding. Recognizing momentum. Learning the clear path idea. So for all of you new users, and this is RK and Lost, NPC, and who else is new in here? Talk to me. Mr. Paul, Pablo, you still qualify. And even you guys that are coming back from a little bit of a break, coming back, Derek, right? Maybe I had software and I didn't want to follow a plan and it didn't work out well for me, but now I'm back and I'm ready to commit. That happens more often than you understand. So for you new users, for you returning users, we blanket you with very conservative rules. We teach you the absolute best way to enter a trade, the absolute strongest advantages, and how to read your charts and recognize them. Returning but new, following every day now. I love it, Dennis. Keep it simple. And then, guys, these very conservative rules, recognizing these advantages, that solid plan, the KISS plan that optimizes your chances of success as you learn to read your indicators, that's what we do for you. So for you new users, it feels like every termination condition is bad. For you new users, no momentum sucks. Why would you even think about a trade, right? In any area beyond the triggers is horrible. Why would you enter there? And guys, we do that. These blanket rules are in place for new users, and we encourage you to focus on the best because it increases the likelihood of success. And confidence comes from the memory of success. And when you're feeling confident, it's surprising you actually are more likely to follow the rules. They're not always bad. We've watched people trade into termination conditions today and make money. We've watched people take trades from the wrong side of triggers today and make money. But that's based on their experience. They've learned how to use exceptions. So we give you everything you need to find success with the software. Understand that the more time you spend with it, the more you see. And this is going to open doors. So if you're not where you want to be as a professional day trader in your second week, it's okay. You're right where you need to be. Learn the process that yields results. And I'm going to go back to it again like a broken freaking record. Momentum, path, and entry. Momentum, path, and entry. And when you learn the process, the results seem to follow. That's where the KISS plan comes in, guys. And that's why I give you guys the KISS plan. If you can keep it that basic, and the same is true on TradingView, if you keep it that basic, if you're okay not looking for all of the trades, and you know who I'm talking to right now, look for the best trades. Look for the checklist trades. You can find an extraordinary level of success, guys. I've been doing this for over 5 years, and in 5 years, the one thing that has been the constant is that the most successful traders do the exact same thing every day. They take the exact same trades every day. They have the exact same advantages every day. And the further my new users break away from the plan, from the simple, when they begin to find all the trades, the longer it takes them to find the success. So question everything, guys. I encourage it. If something doesn't sound right, make me say it correctly. If something doesn't make sense, tell me that I need to change the way I'm talking to you so that I can give you the answers that you need. But give yourself a little grace, ladies and gentlemen. You are brand new. You did not become an engineer the first day of college. You were not a doctor before you ever got into medical school. You were not in finance, banking, or whatever you did in life on day one. You had to learn. You weren't a pilot on day one. They made you sit next to the pilot, and he told you what he was doing. So question it. Give yourself some grace, but keep it simple, guys. You'll be floored at how easy it becomes to pull profits out of the market. This is a very incomplete look, isn't it, 8 ticks? Everything says down, you go down and get out of trouble. Okay. Probably just a lucky move, right? But then everything says down and you go down and you get out of trouble. All right, once again, probably luck. The large chart said down. There's no doubt in my mind. This is just a 5-1. So you go down with it and you get out of trouble. All right, 3 for 3. Maybe coincidence? You get to the other side of trouble and you re-enter because everything says down. And then you get out of trouble. Whoa. And then you sit tight because you can't find an advantage where the two charts line up. And then when you finally get 3 divergences right at trouble, you decide to go short and get out of trouble. 8 ticks. I know that the S&P was screaming down for the duration of every trade that you took. I know that the S&P was trending strong. And guys, does everybody notice the only direction 8 ticks went was down with the large chart? The only trades he took were short trades. And every time he ran into something solid, he chose to take profits instead of hope that it broke. And when it broke, he found the next opportunities. 8 ticks, freaking brilliant trading. What did 8 ticks large chart look like when he was taking all these short trades? It looked like that. Did I sum it up right, 8 ticks? Did I read it correctly? Everything said down, you went down until you reached something that could create a bounce, and then you waited for it to break, and then you went down until you reached something that created a bounce, and then you waited it for it to break, or to have room to go back to it with the large chart. Get freaking brilliant. Guys, not a trend trade, not a trend trade, not a rules-based trend trade, not a trend trade, not a trend trade. But with momentum and path, I'll be damned. There's a lot of opportunity in the market, isn't there? Great job, 8 ticks. All right, Miss Jen. Let's see what you did. Zone reached. All right, Jen. With the smalls down, with the large down from the outside, help me out with this trade. At 49, is this because of the HVA trade? Well, I see that you went long. I'm curious why. So your HVA trade, Jen, those happen, you buy the pullback to the HVA. An HVA trade is not a close on the correct side of the triggers. It is literally buying the HVA. You were in 5. Okay, so there is no trade there. We recognize that you didn't like the look, not taking the trade. So you just jumped in with momentum, right? And hope that it went up. And it didn't. And I love that you made a little money. And then it pulls all the way back to the HVA. And you take your exit at your entry. and you say, oh crap, that wasn't my entry. And then you close on the correct side of the triggers and you exit mid-band. Right on. So, Jen, two types of trades. Or three types of trades, I suppose. I like it. I hate this exit more than you'll ever know because it's right at your entry spot. But that's okay. I don't have to like it. So when you talk about the trading plan checklist, I'm just going to pull up the checklist. There's the trend trade that's trading with the 15-minute, right? And that's a buy or sell close on the correct side. So that's one entry. There's the HVA trade that after the zone is reached, you buy or sell the pullback to the HVA if the smalls are above the large. So Jen, your HVA trade was right here. And you were already, I stink at math, 6 points deep, right? 6 points deep. Now this is your HVA trade, 100%. This is your pullback to an HVA line. But there's really not a trade that says with strong triggers against you in a downtrend from the weak side of triggers, get in at the HVA. Because that was your HVA trade. So having a zone here would have been a huge advantage. Your patience on getting in on the right side of those small triggers, at least giving you a fighting chance if the HVA was going to hold, was brilliant. And getting out at trouble made a lot of sense. So that one is just, oh no, it's going up without me. I'm going to try to go with it. And it just didn't. And shenanigans. We know those. Great management. Great management on that one. Shenanigans. I love that word. Because it describes a lot of my trading when I'm making stuff up. And then great patience, knowing not to fight the triggers. That pays dividends, doesn't it? Have you guys recognized that? You guys that are starting to find your groove on TradingView, are you noticing how imperative it is not to fight those small triggers down? And then there's your trend trade with the close below to go down with down triggers, room to trouble. If you missed it, check it out. There's your termination, right? Price reaches resistance. Small triggers get below the large. Where did it pull back to, Mr. Paul? When price reached that termination condition on the 15-minute, pulled right back to the HVA, didn't it? Awesome. Doesn't mean that it's going to continue down, but that sure does look like a rules-based trade to trade with the trend from a termination from an HVA. And if you were in at 78, guys, you're well over $200 into this trade. And now, which HVA do you think was going to be easier? Against everything or with everything? I love it. First one was an awesome opportunity for the large chart termination. Second one was a good opportunity from a large chart termination. And we'll see what it does. And if you got in at 58.75, the market went all the way down to 61, which is 17 points, $340 per contract. It's okay to be break even. Did anybody catch it the other way, or did you decide that it could only be up because it reached a zone? John, HVA of white bar is key above spot. We probably go up. I love it when John comes in the room and says, Mark, I know your rules were met for an HVA, but because I've got things that nobody in the room has, and I know things that nobody knows, it's probably going to push up. And let me show you why. Let me show you why. Does everybody remember that this is the breakout bar coming from a termination? And John, what time frame is this? I don't even know. Is this a 15-minute? That's your 15-minute, right? So guys, this is a big picture. John put his market flow on it, and I'm just going to show you his thinking because we've got time. Nobody else is posting. Breakout bar up. Does everybody see it? This line right here is the absolute highest concentration of buyers in that up bar. Is everybody good with that concept? That's the one that, if this is an up bar, creates the green line. One of the patterns John noticed and we've been looking at is if your next bar opens above that highest concentration of buyers, the market's more likely to go up than down. Highest concentration opened above, the market's more likely to go up than down. Highest concentration opened above, that's where John Novak takes the trade, looking to go up with it. It's not a guarantee. Look for your rules to be met, but let's see if we can find it over here. So watch this for management. If you took the HVA trade and the market pushed down and gave you some money, and then you get this up bar, and the next bar opens well above, guys, it's probably going up and retesting some stuff, right? And this down bar, the market opened above that down bar. So it's kind of cool. And guys, that's not a part of the plan, but it's a pattern that you'll begin to recognize. Let's see if we can find. That was a down bar. It closed below the down bar and it pushed or opened. The next bar opened. So it's kind of a cool pattern. There's your breakout bar. The open was below the breakout and the market goes down. So, and then it's neat, Mr. Paul, and it takes a while. And John says, that's my keep holding long pattern right there. When he got the up bar and then it closed above it, and his stop is below that breakout bar. So what he's doing is he's saying my big chart says likely to go up. My mid chart, he added a mid chart. He's happy but never satisfied, always studying. Says more likely to go up than down. And then if I'm not mistaken, the smaller chart suggested that we were more likely to go up than down. And now my triggers are rolling, and once they roll, I'm on the strong side of those triggers. Guys, that's a bar pattern that you can start to incorporate. If you do what I did, you'll screw yourself up 1,000 different ways with it. But if you use it, let's say hypothetically, I get a pullback to a midband, right? And I'm looking for the close below the midband. When this bar, or below the small triggers, when you get a bar that opens below the down bar's HVA, you might try to fudge the rules a little bit, right? Say, okay, that's a pretty good look. It's still not a close below. But when you get this close below and it opens below that HVA line, it is nothing but Downsville. So it's kind of a group. Get below the triggers, and that's just a warm fuzzy. Good stuff. And now, in my plan, I'm in a holding pattern. I don't have anywhere to go up, right? And my large are down. And my smalls are trying, and it's just, and I got a down bar, and it opened below the down bar. Do you see it? And you will go crazy watching every market flow bar. But guys, these are lessons that we can go back and we could break these down and make pictures, and we could spend 8 hours in a room talking about bar patterns, right? And we could spend 8 hours in a room talking about expectations, and we could spend another 8 hours in a room and just concentrated study and get there. And most of us don't have 8 hours every day to discuss one concept, to look at 1,000 examples. So we do it on a little bigger scale. And we give you those very, very good plans. No, Jen, you don't. You do not. So, Jen, you've been with us long enough to know that John Novak will walk into a room and throw some absolutely crazy shit in here, right? Because he sees everything. He's been doing this for 30 plus years, guys. Everything John Novak does isn't everything that you have to do. I can't stress that enough. If you're new, if you're human, you have a plan, right? If you're brand new, you have a plan. And that's great. So Jen, if we did a large chart read right now, and all we looked at was this chart, what direction are your small triggers going? Down. What side of the triggers is price trending? Weak. Honestly, right now, this chart says nothing but down for the brand new user, Jen. Does that make sense? You had an HVA long right here. That's done. That's history. That's over. So right now, all your chart says is down, which means you're not getting sucked into a long at an HVA against triggers, right? You didn't try to go long into a mid band at an HVA. But the difference, Jen, is what John saw was a way to capitalize in this range right here based on bar patterns because he studied. And you can't play golf against the pros just because you bought a nice set of clubs. Amen. So Jen, if you were new to TradingView and all your chart said was down, could you have taken a close on the correct side of the triggers at a mid band to continue down with the large chart? And your close was at 77.75, and the market is currently trading in the 59 area. Do you see how hard it doesn't have to be? John took the long to get to the short. John took the long to get to the short. And John, not only is a lower divergence, you also have 3 divergences on your large chart. And we know this to be a termination condition. So Jen and John Novak, you're different people. It's okay to be different people. My TradingView plan said my only direction is short, and it was an entry at the area inside of triggers to go down with it. And John says there's nothing to do. Well, right now under the HVA, that's a great spot to take profits, but everything says down. Every indicator on every chart says down. And if you guys get caught up in the micro movements of the big picture, you're going to drive yourself freaking nuts. Freaking nuts is the technical term for where you will drive yourself. So keep it simple. As long as these are down, it's okay to go down with them. As long as these are down, it's okay to take the trend trade from the mid band in the areas with the close below. And holy shit, it went down, pardon my French. And it is still going down with the big chart. Crude oil, they're down. The only direction is down. Gold, they're down. The only direction, I can't even get to it, it's been so much down, is down. Could you imagine how you would feel taking the close on the correct side of the smalls from the mid band and just riding that mofo all the way down? So John's not wrong on any of his chart reading. He's brilliant. John, you didn't hear that. You're my sibling. You're stinky and nobody likes you. But For my new users, don't focus on the moves within the moves. Focus on the best moves, the highest probability moves. Know that your next trade is always coming. The market is not going to flatline on you because you're not rich by 9 a.m. So that's how we're going to end today. That was that breakout bar down. And the next bar opened above the high volume area. Let's see if it pushes up or if it decides to go down with momentum. I don't have rules met anywhere. This is just kind of studying. I want to see what it does. Kind of like